Hey everyone, welcome to the channel. In today's video, I want to show you how anyone can go from a really poor credit score, or maybe the credit score that you just are not proud of, to over an 800 credit score. I was able to do this. I have currently an 813 credit score. It really just opens up a lot of doors as to what you can do versus having a poor credit score where you're limited or you're going to pay more. I think all of us at some point in our lives, we want to buy a car, we want to buy a home. If you have a poor credit score, these are going to be just boundaries that are going to limit you from getting a good rate. And in this video, I just want to explain ins and outs of credit, how it works, and really just the fastest way that really anyone can go from a credit score that they're not happy with to over an 800, which will open up just a ton of doors for you. So if that sounds good, stick around to the end of this video and I will explain exactly how I did it and how you can too. Okay guys, if you're new to the channel here, we talk about entrepreneurship, passive income, personal finance, really just helping you in all three of these really important areas of your life. If you find value in this video, make sure to hit the like button. It really helps the YouTube algorithm. Hit the subscribe button so that you don't miss any videos, and click that bell notification. So without any further ado, let's get into it. How can you achieve an 800 credit score or higher in the shortest possible time frame? Okay, so a credit score is really just nothing more than a number. It is a value between 300 and 850. The higher your credit score is, the more that lenders will see you as not a liability. Your ability to pay back any loan amount or money on a credit card or a mortgage or a car payment, all of these contribute to having a higher credit score. If you have a 350, 450, 550, anywhere in this range, even up to 650, you probably haven't been paying your bills on time. You probably have collections or late pays. And really, this is what banks are going to look at when they decide to approve you. And if they did approve you, are they going to give you a good rate? If you're someone who has a 550 credit score versus someone who has an 800 credit score, the bank is going to give the person with the 800 or higher just prime, perfect rates. They believe that you're going to pay that back. And this is really going to make a huge impact on anything that you do in your life where you're going to borrow money. Again, car payments, mortgage, credit cards, etc. Okay, so in the United States, we have 3 credit bureaus. These are the 3 companies that all produce a score. They will vary a little differently between them, but we have Experian, TransUnion, and Equifax. And in the United States, really anywhere you go where you're going to run your credit, whether it be through a bank, a mortgage, anywhere that you run is going to happen at one of these 3 credit bureaus. And really, for the most part, Experian is the gold standard. This is really the bureau that counts the most. You want to have your Experian score the highest. Doesn't mean that you need to neglect the other 2, but when lenders are pulling your credit, in a most case scenario, they're going to pull your Experian credit file, and this is what needs to show really just the highest score without any blemishes. So we have 2 different scoring models. We have what's called FICO score, and we have the Vantage credit score. I would say that 90% or more of lenders are going to pull your credit, and it's going to be through FICO. If they pull Vantage, which happens maybe 10% or less of the time, some lenders will use this, but in a most case scenario as well, they're going to use FICO, and this is, again, what you want to really just base your score off of. Okay, so first up is new credit. This makes up about 10% of your credit score. Every single time that you open a new credit card, if you take out a loan, this is categorized in this 10%. You will take a small score hit where your score will go down slightly once you take this new loan or card out. But this is a temporary dip in your score. But this entire new credit aspect is about 10% of your total credit portfolio, your total credit file. Okay, so next is the length of your credit. So this accounts for 15% of your credit file. And what this means is if you've had credit for 6 months versus someone who's had credit for 15 years, This is going to really just be the difference between how to get a higher credit score versus having a low score. And the longer you have positive credit history where banks, institutions are reporting that you're making your payments on time, the longer that you have a credit history, the more that your score is going to go up. Again, this accounts for 15% of your total score based on the length of your credit. So I would say do not get rid of any of your old cards. I would say the exception to this rule is if you have an annual fee, you ask your credit card company if they'll slash the annual fee or get rid of it, and they won't. You can at that point make the decision if you want to get rid of your card. But I would say even under those circumstances, I would still not get rid of any old cards unless you have a really healthy, thick credit file, because when you get rid of an older card, your average length of time will go down if you get rid of those old cards. So I like to just recommend take your old cards, put them in a sock drawer. You don't have to use them. Just make sure that they don't carry a balance, so you're not paying any interest on them. And as long as you have the card open, it's not going to affect this aspect. Okay, next up is what we call credit mix. This accounts for 10% of your credit file. Now, in an ideal situation, you have credit cards, you have mortgage, you have maybe a personal loan, different parts of credit that you can add into your overall credit file. This is what's called credit mix. And if you show lenders that you're not just able to pay a credit card payment each month, but you can make a mortgage payment, you can make a car payment, you can make multiple credit card payments, even a student loan, etc. This just really shows a wide range that you're versatile, that you're able to make payments really just in all aspects of just someone's life. If you have just a credit card or just a few cards and you don't have anything else, this is really going to hurt your credit mix. It only accounts for about 10% of your total file, so it's not as important as some of the others that we're going to talk about in a moment, but it's always a good idea if you want to maximize your score and get over that 800 credit score hump. Make sure that you do have a range of different types of credit. Okay, so this next step is most important, and this is payment history. This accounts for 35% of your credit score. And I can't emphasize this enough. Make sure you always make your payments. I don't care what you have to do to make at least a minimum payment, but if you carry a balance, let's say on a credit card, always make sure that no matter what goes on in your life, you have made that credit card payment. By missing even just one payment, it will drastically affect your credit score. And people that have over an 800 credit score or a very high credit score, they don't miss payments. You want to demonstrate to lenders that you're not a risk, you're not going to miss payments. So very most important, and it makes up the majority of your credit or the highest percentage of your credit file, which is 35% of your total credit portfolio, your credit file. This is payment history. And again, even if you can't make your entire payment in full, as long as the minimum is met, that is what's going to show. If it takes you months or years to pay off debt that you have, as long as there is no missed payments, whenever it comes time to pay off of all of your cards or all of your debt, it's like it never happened that you were carrying those balances. That's not going to show on your credit when that happens. What would show is if you miss a payment. I have all of my payments on auto pay to ensure that I never miss a payment. I have text alerts, push notification, just in case something were to go through, something is charged on one of my cards. I know about it. I know that I need it to make that payment. And this is really what's going to take you from really anyone with just mediocre or poor credit to ensuring that you can reach an 800 credit score by having a perfect or near perfect payment history. Okay, so the final step is amounts owed. First of all, this accounts for 30% of your credit. So it's just under on an importance level of making those payments on time in your payment history. But in my opinion, your credit will take a hit if you have high balances, if your credit utilization is high, where you are, let's say you have a $2,000 limit on a card and you have $1,600 balance, your credit utilization is going to be very high. If you carry generally what we like to say is under 10% as a maximum, this is going to keep your utilization low. It shows lenders and credit card companies that even though you have credit to use, you have money to spend, you're being responsible, and that you're only carrying a low balance in comparison to what you can charge. Now, this is similar to what I was mentioning in the last step. The important part here is that you can carry a balance, you can carry many balances on your cards, and even if those balances are high, you have high utilization, you could carry high balances for years and years where this aspect of your credit is just not the greatest. But when it comes time to being able to pay off these cards, or you start making bigger payments, and once those payments are cleared, once your balances are zero or paid down, this part of your credit will drastically increase where you haven't done any permanent damage. So it's just really, really important to realize that even if you're carrying those high balances, it's gonna be okay. Whenever you make those payments and when you pay them off, things will basically prove as good as they can get when you carry no balance. Okay, so a bonus tip. You wanna make sure that when you're applying for a new credit card, you are using cards that are going to work with you and they're going to grow with you. If you're choosing cards that have really just high annual fees, they have high payment fees, really your starter cards, if you can do so, avoid these at all costs. When you're applying for credit, other lenders are going to see which cards and which institutions have either pulled your credit or you have a relationship with, and they're going to take this into consideration when they're approving you for either a high credit card limit or they're going to extend you credit. So you really just want to put yourself in a good situation where you're not using cards that are really just costing you an obscene amount of money that you can avoid. I would stick with the Chases, Amex, Wells Fargo, credit union cards, cards that are gonna really just grow with you. They're not gonna overcharge you with nickel and dime you on little fees, and they're gonna provide value. And when you do this, when you're building your credit, if you're working with good institutions, this is another way where you're gonna get higher credit limits with them over time when you display that you're a trustworthy person to work with. And really, these are all contributing factors that are gonna build your credit score to the 800 range. There really isn't anyone out there that has a bunch of starter cards that never gets Amex, Chase, or any of the higher tiered cards where they're just in these low limit kind of trash cards. You're never going to achieve the 800 score or higher by only having really just low end institutions or considered high risk institutions that are lending to you because of your credit score. So if you can avoid it, really just stay away from those kind of cards. Kickstart and help you along your journey as your credit file grows, and as the length of time grows that you have credit, it's going to allow you to really just increase your score much, much higher. So if you did find value in this video, click the like button below. It really helps out the YouTube algorithm. Leave a comment. Let me know, really, what are your thoughts? What have you gone through? I want to hear about it. It helps our community. And consider subscribing if you like videos like this. So as always, thanks a lot for stopping by. I will see you on the next video. Thanks, guys.